6 p.m. almost. Had an extremely tough trade session filled with information, and hopefully we can deduce something. As we know, as you all know, that we are actually net long on the market. We are entirely carrying our positions, and by the looks of it, as you can see, we have almost given away half our gains in Torrent Pharma, and we are still holding Nifty. We have given quite a lot of gains back from Nifty also. Anyways, a one-day trade session is not enough for us to give up our positions. So let's just have a look at how today's price action impacts our overall assessment, if at all. So just a quick recap. You know that we have discussed this earlier, that our hypothesis going into this particular trade setup is actually the W pattern. So if you remember, if you haven't already, just watch a video dated a couple of days back. There are not too many videos for you to check. And somewhere around here on the closing, we hypothesized that the pattern that the W pattern is now in play. Now, with the W pattern in play, so say it was here that we hypothesized that the W pattern is in play. What we really expect is that this particular high, 9125, should be comfortably taken out, and with it, the market gives itself some interesting pattern targets, and like we discussed last time, maybe 10,580, 600 level is more like an interesting zone for the market to come and check. So this was a couple of days back. Since then, the market, as you can see on the daily charts, it has sort of given us one inside day. And today, with a gap up opening and a sharp correction back inwards, this is a textbook bearish engulfing as it engulfs this particular candle. So we have already got a spinning top, which is an inside day, which is a sort of a sign of indecision, followed up by a bearish engulfing, which at the moment is not confirmed. So not looking too good for the bulls. But like we discussed, the probability of the market the probability of market selling off is higher, but the reward in the event it doesn't is greater for long. So it makes this as a long trade. It's not completely wrong. Trading the W pattern, which is a bullish reversal pattern, which is completely applicable given the previous price action. So and so it's not a wrong trade. It's a trade that's you could say that's basically that's really speculative and high risk high reward kind of a setup. So we are busy protecting our positions, and today's movement in market really did not help us much. So if you look at the hourly chart on Nifty, so we can clearly see that today the market, after a long holiday, gapped up clearly above this particular range. Right here, I'll just mark this with the standard color. It gapped up completely above this range and traded above it for a full hour, till finally in the last 4 hours of the day it gave up all the gains with panic in the last 1 hour of trading session. So yeah, this is not that great, but when we look closely at this particular chart, we see that this chart is characterized by a series of gaps. So on the downside, we see, say for example, a gap around this particular region right here, which I'm marking, which is still here. And in this particular region, we see a lot of trading activity. So just for simplicity and visualization, so here we have one. So this is one full, very volatile day of trading. Then here we have number 2. Another very volatile trade session. So the market gapped from 8,700, opened to 8,000. That's huge. And then as you can see, it's formed a slight spherical bottom, and it held. So good for Nifty. The third time around the test from this pivotal high, the market came back into this gap support, and it found all the support right here, and the market gapped up. So making it the third time the market actually came back in this particular region and formed a gap. So what we see on the downside is that we have a lot of gap support lined up for Nifty from 8,500 and below, and also the gaps that got created, the gap that got created today got filled intraday, but we can see that right here also we have a gap. So not only is there support at 8,500, there's immediate support even at 8,800 for Nifty. And Nifty at the moment is into the support zone. Having said that, however, we know the preceding move is downwards, and it should not come as a surprise if the market rejects this. So we have to be prepared for both cases. Case number one is the market coming back into the range, and case number two is the market moving up into the range. So how do we trade this? We have seen this already. Sort of, we have this sell on Nifty 7500 put. Like we said, it's a defensive position. Sorry, and this position got created basis. We can see this right here. I'll just mark this even darker. Is basis this low? This we all when we are writing 7500 put, we are making one statement that Nifty will not close this expiry below 7500. That's it. That's the statement we are making. But when we are buying the future, we are basically saying that the Nifty is going to trade above the value that we have bought. This 7500 put to me still looks good, given that we have support on zone 1 and support on zone 2, which is the 8500 to 8000 region, which is a huge support for the market. So yeah, so now coming back to the question, how do we trade this? In the short term, if for any reason Nifty is to take out this particular high of 92.75, it will be reasonably safe for us to move our put writing from the 7500 level to the almost 8000 level. It becomes reasonably safe, and the justification is the multiple gap supports and clear cut source of sort of like a source of formation. You also you can Google that this is typically called the island reversal pattern. And so we expect this that the market is likely to hold this particular region, provided we see some movement from here till here. Then it becomes safer. If we don't and we see a continuation in this direction, I think it will become too risky to ride this particular put. So we have to trade this position very carefully. We have to be prepared for one, a ranging market, which will be a very boring market, and two, a market with a clear bullish reversal pattern in place. So let's hope for the best. Let's hope that the bullish reversal pattern actually kicks in, which to my guess is already triggered. And we'll have to see how this pans out in the coming few days. So just to conclude this particular video, on the short term, we are seeing a lot of gap support, and Nifty has, at the day's correction, walked into one of the many gap supports that exist. And given the nature of the chart structure, given though it is possible and reasonable to take both a sell as well as a long position, it's clear that the long position is more rewarding, because as soon as the market sells off, it walks into a series of support zones again. And yeah, so it's a decision that most traders have to trade. Do you sell the 9050 call, or instead do you sell the 7500, 8000 put? And this decision will by and large play a role in your final decision of selecting the futures that you take. So anyways, tough day today, and let's hope that this particular bearish engulfing candle that is formed for our sakes does not get confirmed tomorrow. But if you're a seller, best of luck to you. Good trade day for you, and hope you're fun and having safe. Hope you're having fun and are safe. All right. Cheers. Bye.